Hello and welcome. Yesterday, the European currency failed to handle pressure from bears. It made several attempts to hit the level of 1.1323, but they turned out to be unsuccessful. As a result, the euro extended weakness. In the first half of the day, Germany reported the IFO Institute's business climate data. The current assessment indicator fell below analysts' forecast. The business expectation component rose to 95.2 from 92.7 in December. This indicates that many economists and market players expect the German economy to pick up significantly in the first quarter of this year. This, in turn, will support the European currency. In the second half of the day, the United States released data on consumer confidence. The indicator dropped to 113.8, indicating that Omicron and high inflation weighed on Americans early in the new year. The market reacted to the news with a reversal followed by an advance in the euro against the US dollar. Today's macroeconomic calendar is bereft of any important releases for the euro area. Traders may take notice of data on new home sales from the United States as well as good trade balance that is forecast to decline. The main focus of market participants will be on the third rate decision. The key interest rate is expected to remain unchanged. At the same time, there were rumors that the regulator could raise interest rates as early as January. For now, the central bank is anticipated to hike rates 4 times this year. The first increase is scheduled for March. Apparently, the market has already priced in this rate hike and expected the regulator to act even more aggressively in the future. Thus, the trading day is going to be volatile. From a technical point of view, the level of 1.1292 acts as support. In the event of a false breakout at this mark, the euro will have a chance of recovering to 1.1323. Its breakout following the third meeting will create an additional buy signal. In this case, the European currency will most likely rise to 1.1358 and 1.1390. In the event of bull subdued activity at 1.1292, it would be a wise decision to wait the price to hit a new low, falling below 1.1265. A false breakout at this level will provide us with a good entry point to buy the pair. Long position on a rebound can be considered only after a third meeting and its press conference at around 1.1224 or 1.1208. with a view to catching an intraday correction of 15-20 pips. Speaking of the British currency, bulls managed to protect the level of 1.3438. Yesterday, a strong sell signal was formed, but demand for the pound sterling bounced back. Thus, the 1.3438 mark will be in the focus of traders' day. Before going long on a rebound at this level, I recommend considering long position amid a false breakout at 1.3479. The British pound may well enter an upward correction trying to break through and consolidate above 1.3527. In this case, the volume of long position will increase and the pound sterling will advance up to 1.3565 and 1.3612. At the level of 1.3612, it would be possible to go short on the rebound. Short position at 1.3527 can be considered only in the event of a false breakout. Alternatively, traders will be able to sell the pair amid its test of the 1.3565 mark. Note that today's Fed meeting may have a severe impact on investor sentiment. Therefore, there's a likelihood the market may start moving in any direction. Everything will depend on regulators' monetary policy and the committee's forecast. Good luck. Hello and welcome. Yesterday, the European currency failed to handle pressure from bears. It made several attempts to